Hello, wonderful traders. Welcome back to UCFX. Welcome back to another wonderful video. Yeah, before we proceed to what we have for today, please, if you're new to the channel, please hit the red subscribe button and turn on the bell notification button. In this way, I'll be encouraged to be creating videos and contents like this. Yeah, and as well, you'll be among the first to be notified whenever I publish new videos. Yeah, I know you've done that. Thank you. Now let's hop into the chart. Let's look at what we have for today. Yeah, from what we have on our screen, how to identify valid order blocks. So in this video, I'll be teaching you everything you need to know on identifying valid order blocks so that you avoid taking fake order blocks and I'll avoid being trapped in the market. So before we proceed on this video, I have other videos I've created in this channel about learning the smart money concept. So in case you want to boost your knowledge about the smart money concept, I have a full detailed video starting from episode 1 to episode 5 of Learn Smart Money Concepts. I created it in the form of A to Z format, starting from the grassroots up to the detailed advanced information. So in case you need the videos, I'll be leaving a link in the description right from episode 1 to episode 5 of Learn the Smart Money Concept. So let's start on what we have for today, identifying valid order blocks. Yeah, so let's proceed on the video. Yeah, how to identify valid order blocks. These are the rules in identifying a valid order block, the rules that you need to know if an order block is going to hold or not. So rule number 1, directional bias of the market. You need to first of all identify the directional bias of the market right from the monthly time frame to the weekly time frame and the daily time frame. You have to understand what the market is doing from the higher time frames. So in that way, we identify the directional bias of the market. Then recent order block formed or recent formed order block. That's the rule number 2. You have to find the recent order block that is formed in direction of the market, whether the market is bearish or bullish. If the market is bearish, you have to be looking for the bearish order blocks. If the market is bullish, you have to be looking for bullish order blocks. You don't have to counter trend the trend. If not, you get liquidated. Now the third stuff we are going to be looking at is the third rule is the break of structure, BOS. You have to wait for a break of structure after an order block must have been formed. Then another rule is liquidity. The fourth rule is liquidity. You have to first of all identify liquidity before it tap into an order block. So the fifth rule is discount levels. That's the Fibonacci discount levels. You want to be buying at discount levels when you go to the to a market. You don't want to buy at premium prices. Everybody wants to buy at discount prices. So the smart money, they buy at discount levels. So you want to be buying with them as well so that you don't lose money. So the fifth rule is discount levels, which is the 0.618 and the 0.786 of the fifth levels. Then the last rule, the last but not the least, is lower time frame confirmations. You have to as well go down to the lower time frame to confirm any trade that you want to take. So you have to go down to the lower time frame to know if the trade will actually hold, and this in turn will make you to have the tightest stop loss you can imagine. So these are the rules. I'm going to be breaking them one after the other. I'm going to be showing you how it is done, how it is found, and everything about that. So stay tuned while I bring it on. Okay. Let's say we are in a downtrend. The monthly, the weekly, and the daily are showing downward movement of the market. So as you can see, you have to, from the first rule, directional bias, which means the market is in a downtrend. Then the second rule, you have to identify a recent formed order block. Then you would agree with me that any recent formed order block will be somewhere around here. So you have to grab your tool to mark out the zone. So you mark it out. Then what's the second rule? What is third rule? Break of structure. As you can see, we had a break of structure right here. So you would mark that out as well. So we had a break of structure as a BOS. So we had a break of structure. Then what's the fourth rule? Liquidity. So you have to wait for price to come back into this order block. Sorry, we need to mark that out as well. This is our order block. That's our OB. So this is our order block, your point of interest, anything you want to call it. So you have to wait for price to come back to this order block. And as price will be coming back to this order block, you need to see liquidity. In this case, you'll be seeing liquidity as equal highs. But in the case of a bullish order block, you'll be seeing liquidity in the form of equal lows. So let's say price does stuff like this. So let's say price does stuff like this. It goes up, comes down. Before it tap into the liquidity. So here we will say that we will consider this as liquidity, equal highs. Don't worry, when you jump into the chart, I will show you all this. I'm just trying to paint the picture before we jump into the chart. So this is our liquidity. So you mark it out as equal highs. So mark it out as equal highs. So that's rule number 4 fulfilled. Then what's the rule number 5? Discount levels. So you have to take your fib from this point to this point to know where price is at. Just like I said, discount levels are 0.618 and 0.786 of the Fibonacci. So you have to take your fib, mark from this point. Oh no. You have to take your fib, mark from this point down to this last point. As you can see, price is sitting right at our discount level. It's inside our discount zone. It's 0.618 and 0.786 of the fib level. Then this brings us to our 6th rule, which is lower time frame confirmation. So you have to go down to the lower time frame to as well mark out an order block. Let's say this first order block formed on 4-hour time frame. We identified it on a 4-hour time frame, which means you have to be going down to 15 minutes time frame to wait for another formation of an order block and a break of structure and a tap into the order block formed in the 15 minute time frame. Don't worry, I will be breaking this down. So let's say we are on 15 minutes time frame and the price did something like this. After I tap into our order block, price did something like this. Price did stuff like this. So you will mark out this zone This is our 15 minutes time frame. So you mark out this zone, you mark out this area as another break of structure. So you mark it out as another break of structure. As another break of structure. This is all about lower time frame confirmation. Then you will as well mark out an order block formed in this 15 minutes time frame. So you grab your tool again, you mark out the 15 minutes time frame order block. Let me change the color. Let me take a blue. No, you already have a blue. Let me take white or something. Yeah. So you would as well mark out this time frame. This 15 minutes time frame. Mark it as a 15 minutes order block. So M15 order block. So M15 order block. Then you would as well wait for liquidity and then tap into that 15 minutes order block. I know this might be complicating, but trust me, you get it, you will understand it once I'm done with this video. So you would as well mark out liquidity in form of equal highs again. So you would as well mark out this place as liquidity. So generally you need to see exactly the same stuff you saw here in the bigger time frame. Just like I normally say in this channel, the market is fractal. So you will be seeing the same stuff in every time frame. So here now our liquidity, we consider our liquidity to be grabbed, and then you take your Fibonacci as well from this point down to this point, and this is the place that you'll be taking your entry from. You will see prices as well sitting down at sitting right at our discount level, the 0.786 of the Fibonacci level, which means you'll be taking your trade right inside that area. So here our lower time frame has confirmed this trade. So our lower time frame has confirmed this trade. From there, you take your entry and target lower all the way down here. So this is the way that you can actually get those small stop loss and stuff like that. So having this picture in mind, let's go into the real chart, and I'll be breaking everything down just the same way. Okay, here we are on US 30. Yeah, let's say this price action hasn't happened yet. Let's say we only have from this point to this area. So you would agree with me that this market is bearish. You can see break and break of structure, higher highs, lower highs, lower lows. So here you will agree with me that the market is bearish. Here we are on daily charts. The monthly and the weekly will be showing the same thing. So on this daily chart, you would agree with me that the market is bearish. Yeah. Just like I said, let's assume this price action hasn't taken place. So from this area, you would agree with me that we have an order block right here. We will consider this as an order block. Why? Just like I've been saying in my previous videos, you can go down and check it out. I'll be placing the links right below. This is an order block. This is a bearish order block. Why is it a bearish order block? Because we had an impulsive move after the formation of this green candle. So you would mark it out from the lows of this green candle to the highs. So this is our order block. So prior to this move, you have identified the directional bias of the market according to the first rule. Then you have marked out the recent formed order block. Then what next? Break of structure. Just like as you can see here, we had a break of structure. So we had a break of structure right here. We'll be marking that out as well. BOS, break of structure. So we had a break of structure right here. Then according to the third rule or the fourth rule, if I'm not mistaken, you need to wait for price to come back to your point of interest, to your order block. So we're marking this out as a daily order block. So daily order block, that's the daily order block. So this is our daily order block, which means we will be using the 4-hour time frame and the 1-hour time frame for our confirmations, for our lower time frame confirmations. Remember, just like I said, if you have your OB in the 4-hour time frame, you go down to the 15 minutes time frame, the 1-hour and 15 minutes time frame to confirm your trades. Here we have our order block on the daily time frame, so we're going to be using the 4-hour and the daily and the 1-hour time frame to be confirming this trade. Just like I said, after your order block has been formed, break of structure, the next thing you need to be looking out for is liquidity. So let's go down to the H4 to see what price did there. So here on the 4-hour time frame, you would agree with me that our liquidity will appear in form of equal highs, just like I said, because this is a bearish order block. So you mark it this zone. You will agree with me that this is an equal high. This is where our liquidity is. This is where traders or less informed traders were trapped because they thought that the market would be going down from this area, but the market came back and took them out. So this is what we call liquidity, because this is where most traders are trapped. This is where most traders are doing the opposite thing that the market is doing. So after here, so we are going to be marking out as equal high. So this is our equal high or liquidity. So this is our equal high. This is our liquidity in form of equal highs here. So what's the next point? You need to check where price is sitting at to know if it's at a discount level or still at the premium level or the equilibrium. So you take a Fibonacci from this point down to this point. As you can see, price nicely tapped into our 0.786 of the Fib level, which is our discount zone. So after seeing this thing, what next? Lower time frame confirmation. So you will go down to the 1-hour time frame to confirm an entry to know if this order block is actually going to hold. So we'll go down to our 1-hour time frame to confirm this trade. Just like I said, in a 1-hour time frame, you need to as well see a formed order block, a break of structure, liquidity, and as well a tap into the H1 order block before taking your trades. So let's go down to the 1-hour time frame. So here on the 1-hour time frame, as you can see, here is still our equal highs, our liquidity being grabbed. So what next? Price tapped into our order block, our daily order block. As you can see nicely, price tapped into our daily order block, and this is the last low that was formed after that tap. So you need to wait for that structure to be broken before taking any trades. So as you can see, after that our price broke structure. There was a break of structure, a lower time frame break of structure. Remember, this is all about confirming the daily order block if it would actually hold. So you are using 1 hour time frame for that. So you mark it out as BOS, break of structure. So we have a break of structure, which means we have an order block that led to the break of this structure. Then you would agree with me that that order block is right here. Let's change the color. So this is our lower time frame order block. Remember the last green candle before the downward movement, that's your order block, a bearish order block. After the order block formed, we had a break of structure. As you can see, price went further to even break this other structure. As you can see, oh okay, we can consider it as an equal low liquidity as well. So after the break of structure, you have to wait for price to come back to your point of interest, to come back to your H1 order block. So this is H1 order block. You mark it out as well, H1 order block. So you would have to wait for price to come back to this order block to mitigate it. And prior to that movement, you need to spot liquidity in form of equal highs as well, just like if you've spotted on the higher time frame. So here we have our equal highs sitting right here. Yes, clean enough. This is an equal high. This is liquidity. So you mark it out as well, equal high. So these are equal highs. This is our liquidity. So after marking this out, you need to consider this range. Take your Fibonacci from this place to this point to know where price is at. Is price at our discount level or not? Yes, we have price right at our discount level, 0.786 of the Fibonacci level. That's our discount level. Anything below this 0.786 is the 50% is actually the equilibrium. And anything below this 50% inside this zone is premium. So you need to be selling at a discount level. Yeah. So after identifying your discount level, you can see price actually tapped into our discount level. Our price is actually right at our discount level. Then what next? We have our H1 order block right inside this area. So all our objectives have been met. All the rules are actually obeyed. So what would stop you from taking the trade? Nothing. Everything is actually obeyed. So which means you'll be taking your entry right from this area. So we'll be grabbing our tool. So you'll be placing a short trade, and your stop loss would actually be just above this H1 order block in case of any spikes. So that will be your stop loss, and you will target lower and lower and lower. So we check on the H1 time frame. As you're on the H1 time frame, you see that this place is actually our last low. So you'll be targeting this low at least. As you can see, the risk to reward ratio is massive, 1 to 11. And as you can see, right from that area, the market never went up. So this is actually how you will be catching sniper entries. This is just the way of catching the sniper entries. You have to go down to lower time frame. As you can see, even if you go down to the 15-minute time frame, you can as well get decent entries, because you would agree with me that we have another order block sitting right here, sitting right inside this zone. So you can as well take another, in case you missed this point, you can as well take another point there. So this is exactly how to identify a valid order block. As you can see, the market went all the way down. It had zero drawdown. There was no drawdown at all. The market went all the way from this point down. So let's go to the 4 hour time frame. Let's look at how this actually played out. So on the 4 hour time frame, you would agree with me that this actually played out nicely. As you can see, price reached the next low as your target, as your take profit. So this is actually what you need to be watching out for. Let me take it again. From the lower time frame, we have our daily order block. You have to first of all identify the directional bias of the market. From here, we have a bearish market. So identify the recent formed order block. As you can see, this is our recent formed order block. After that, we had a break of structure. And after that, what next? Wait for price to come back to your order block. And prior to that movement, you need to see liquidity in form of equal highs. And in this case, we have bearish order block, so we are looking for equal highs as a liquidity. In case you have a bullish order block, you need to look for equal lows as your liquidity. So we had equal highs as a liquidity. Price tapped into our order block, tapped into our discount level. We had a break of structure as well in our lower time frame. Another block formed there as well. Price came back to our lower time frame, took out the equal highs, liquidity, tapped into our discount level as well, tapped into our order block. Right from there, you take your entry. So there is nothing hard about these rules. So if you do your due diligence by going back to backtest all this stuff, you would agree with me that you would have a higher win rate in your trades. So you can as well check this one out. The market is still bearish. We had a nice order block as well here. As you can see, we had what I call it a 4 hour or a 1 hour order block right inside this area. After that, we had a break of structure. So we are actually trying to know if this order block is going to hold. So we mark it out as H4OB. With our H4OB, then we had a break of structure. We had a break of structure as well. So what's the next thing that you need to be looking out for? You need to wait for liquidity. Let's go down to, remember this is 4 hour time frame, so we need to use the 15-minute time frame and the 1 hour time frame to confirm this trade. So we go down to the 1 hour time frame. Here on the 1 hour time frame, we have liquidity right here. This is our liquidity. This is where traders were trapped. As you can see, most traders were trying to short this market inside the zone. It failed. Tried to short it again, it failed. Tried to short it again, it failed until it took them out. So that's what we call liquidity. So we'll be marking this out as equal highs. So these are equal highs, liquidity. So after our equal highs, you would be using your Fibonacci to know where price is sitting at. So if you drag your Fibonacci from this point down to this area, you would agree with me that price actually tapped into our discount level, which is the 0.786 of the Fibonacci level. Mind you, when price enters into this zone between this 0.618 and 0.786, you should be looking for lower time frame order block formation and break of structure. You should be getting ready to short or buy the market. So, but most of the times, price for a higher probability setup, you need to wait for price to actually tap into this 0.786. So as you can see, price tapped nicely into this 0.786 Fibonacci level. After that, what next? Lower time frame confirmation as usual. So you go down to the lower time frame. Here we'll be using the 15-minute time frame. Just like I said, we had H4 order block, so we'll be using the H1 and the 15-minute time frame for our lower time frame confirmations. Just like the previous one, we had daily order block. We used the H4 and H1 to confirm the trade, but here we have H4 order block. We're using the lower time frame, the 15 minutes and the H1 time frame to confirm this trade. So if you go down to the lower time frame, to the 15-minute chart, you would as well spot a nice order block, break of structure, equal highs, that's liquidity, and a tap into the order block to confirm your trades. So let's see what the market did inside that area. So here we are on the 15-minute time frame. These are equal highs, liquidity. These are our H4 order block. These are H4 order blocks. So price tapped into our discount level. Then what next? Lower time frame confirmation. So from what we have here, you would agree with me that we had a nice order block sitting right here. So you would agree with me that we had a nice price movement inside this area. After the formation of this green candle, price rallied down. So we will consider this as our order block. So we're going to mark it as our lower time frame order block. So here we have our 15 minutes order block. Yeah. So what next? Break of structure. Right here we had a break of structure. So this is our 15 minutes order block. So here we have our 15 minutes M15 order block. So M15 OB. So this is our M15 OB. Then we had a break of structure. A break of structure. BOS. Remember, this is our lower time frame confirmation. So we need to look out for the same stuff that we actually marked out on the higher time frames. So we had a break of structure, so we need to wait for price to come back to this M15 order block, and we need liquidity before it tap into that order block. And as you can see, we also had further break of structures here. So we had a break of structure all the way down. Then where is our liquidity? As you can see, we had equal highs here, kind of equal highs, or equal highs. Or let's consider this one. Yeah, so we have equal highs. We had equal highs. Then what next? You need to wait for discount levels. So you take a flip from this point down to this point. As you can see, this is our discount level. The most they are the highly recommended discount level that has proven to work over time. So as you can see, price came back nicely into our discount level. As you can see, price came back into our discount level. So this is where you would be taking your entries from. So we grab our tool. You're taking your entry right here. Remember your stop loss slightly above the lower time frame order block, and then you target the higher time frame previous low as your take profit. So we'll be taking our entry right here. As you can see, after that the market went down. This is actually a current market right now. So if you have a real account, or if you are watching it, anytime that you see this video, do well to go and check back how this actually played out, because this is actually a current market. As you can see, the price are still moving. So this is a current market. So, and as you can see, the price never went anyway above this entry point. As you can see, price continued going down. As you can see as well, if you missed this entry, you would have as well waited for a break of structure and then tap into another block. As you can see, the market just kept going the same way. So this is all for this video, and I hope you actually enjoyed this video. If you enjoyed it, give it a thumbs up, subscribe to this channel so that I'll be motivated to be creating more content like this. Yeah, so if you have any complaint, you want me to help you out in any way, in any form, do well to comment on this comment section. Tell me what your problem is, and I promise you I will see to it. If you want me to do any video that you would want to watch, be what you are finding difficulty in, do well to comment as well. I will look into the comment sections and I'll create a video. So this is all we have for this video. Just go back, do your back testing, and I'm sure you will actually understand everything that you need to understand. Yeah, peace.